Welcome back into Lowcountry Money Talk. We left you with a really good teaser because we're going to talk a little bit about what to do with your money in 2022, or at least maybe what some of the predictions are. Phil Bloyd's here with Revolutionary Financial Group. We've wrapped up 21 in a nice little bow, and now we're looking ahead. How are you?
Put it on the shelf.
Yeah.
It's good. I'm great. So I think, Jessa, going into 2022, you know, this time of year we have the New Year's resolutioners. So one of the big resolutions is always, hey, you know, I need to do something about my finances. I need to get my estate in order, all these things. So we will have events. All of our viewers here will probably see, or you can go to our website or whatever. But we'll be doing events the first quarter of the year. So you want to probably try to come to one of those because I'll dig down more in depth on some of the issues.
Yeah, absolutely. And having you here, I get to see you in person, and I get to ask you questions on the break and all those fun things. But having you in person and to, you know, really understand what it is that you do at Revolutionary Financial Group to help you know, manage these portfolios, to help your clients, and all of the implications that you're understanding in terms of expenses. It's great. So that being said, you're going to kind of guide us on a tour of 2022,
right?
And what are we looking at?
So the crystal ball, not mine, but let's go with the Wall Street strategists, whoever they are. So what I saw in the Wall Street Journal is the Wall Street strategists are expecting that S&P 500 index to be up to 4.5% in next year. That's from the Wall Street Journal and the Wall Street strategists, whoever they are. Morgan Stanley, on the other hand, they're expecting that index to be negative up to 6.9%. So that's a pretty good variation.
Yeah, let's see.
Yeah. So I think if we look at the S&P index, the first thing I want to look back to last year just a second again and say, you know, of that index, according to Wall Street Journal, 1/3 of the gains in the Standard & Poor's 500 index for last year was just 5 companies.
Oh, wow. I mean, that's kind of mind-boggling if you think about it, because we do talk about being diversified, and then here you've got this huge chunk all in these top 5. So what does that mean?
So without Microsoft, NVIDIA, Apple, Google, and Tesla, that index wouldn't have performed as well,
right?
Because that's 1/3 of the index. So how do we think those will do next year? I don't know, but it's going to weigh heavily on how that index performs. So what I would recommend is what I always recommend. I deal mainly with retirees, okay? So the idea is, you know, depending on your age, it's going to be really important this year, I think, to make sure that we have the right amount at risk, you know, just in case Wall Street strategists are right, we want to get our return. But on the other hand, in case Morgan Stanley's right, we don't want too much at risk.
Right.
Now the problem could be is if your portfolio is arranged to take all of your distributions out of capital gains from your stock accounts, if those, you know, gains are going down, we probably don't want to affect those. So we need to have an alternate plan to where if the stocks aren't cooperating this year, we can take income from that. So.
Okay, got it. Well, and there's a lot to think about, and it's so hard to, like you said, just navigate when you've got the experts at such odds in terms of what to expect.
They're having some major problems.
Right.
So the one thing I like to leave people with, other than, hey, now's the time, it's the beginning of the year, make sure that you have, you know, you get with your local attorney, you have your estate plans in order. Unfortunately, I lost a few clients in the last month, so that's when they really start, oh, are my estate documents in order? Well, we want to make sure they're in order before that. Look at your tax returns from last year, see if there's going to be any changes, do some strategies there. The sectors that I keep hearing about is more like banks and insurance and financials, because interest rates may be going up. Energy sectors, we're looking at possibly $4 a gallon gasoline by Memorial Day. Materials, and then commodities. Now, they thought the metals did bad last year as they did, but they're thinking they might do good this year.
Wow. Well, and there's a lot of considerations to be made. There's a lot of information in that head. It's been fun to pick your brain a little bit about, you know, just what we saw in 21, what to think about for 22, and boy, it's a nice time to just sort of regroup and make sure your ducks are in a row and your strategy's on point.
Absolutely.
So thanks for helping us out
All
today.
right.
Again, this is Phil Bloyd, and you've been watching Lowcountry Money Talk. We are all set. We'll see you next time.